Good afternoon. Welcome to the weekly Livestock Market Update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
Happy birthday. We get to do that as well. You don't look a day over 29.
I haven't reached 21 yet.
Are you at the stage where you go backwards in birthdays?
That's right. I might be getting pretty close to a different milestone, but it's not 21.
All right. Well, we are glad that you're taking some time to spend your birthday weekend with us. We're going to talk supply and demand numbers, retail prices, consumer sentiment. But to kick things off, let's recap what happened this week in the markets.
Yeah, Megan, this week live fed cattle were almost $2.30 above a week ago, $1.83. So another, I think, weekly record here. When you look at the feeder cattle side, we had feeder cattle markets that were strong this week, $4 to $10 higher on the week. On the future side, the August live cattle futures contract was up nearly $3.40, and the August feeder cattle contract up nearly $1.30. On the box beef side, choice box beef prices were down $12 this week. Ribs and loins kind of led us lower, but lower across the board in all those components. On the hog side, higher hog prices again this week. Barrows and gilts, cash barrels and gilts up $2.60 this week. The August lean hog futures contract was up about 85 cents. We also saw that pork cutout value gain $4 again this week. That now puts it a little less than $7 below where it was a year ago at this time. Your favorite bellies certainly helped the strength of that pork cutout value this week.
And we're going to talk about bellies coming up in a little bit as well. Let's take a look at slaughter numbers. As we're looking at these weekly slaughter numbers, obviously a big jump from last week's shortened holiday week.
That's right. USDA is telling us for the week ending July 15th, 633,000 head of cattle. That's 94,000 head above where we were a week ago, but 40,000 head below where we were a year ago. On the hog side, a run of 2.34 million head of hogs this week. That's up 386,000 from the short week last week, and 85,000 head above where we were a year ago.
As we take a look at these year over year numbers, are we surprised to see where we're moving in terms of beef slaughter and hog slaughter?
Probably not surprised. In fact, I think when you look at cattle slaughter in particular, so we're down 3.6% year to date. That number might keep growing as we talk about some shorter supplies. On the hog side, up 1.2%. Again, I kind of say we're up as much from technology improvement in terms of pigs per litter, et cetera, that's giving us more hog slaughter year to date.
Big report this week, Scott, supply and demand numbers. We won't talk much about the grain side of things, but as we take a look at those livestock numbers, walk me through the projections and the updates from USDA.
Yeah, Megan, we got USDA giving us strength, especially in cattle and hog prices in this report from where they were back in June. If we look at fed steer prices, USDA raised their 2023 estimate $3.60, which just reminds me to say we already had 6 months under our belt of actual prices. So getting more positive about where we're going to go in the second half of the year. And then they also raised their 2024 estimate up $4 on fed cattle. That will put them at $184 for an annual average. All right. So I always like to remind us, we'll have variability around that annual average that they're saying is $184. So amazing prices. We may not be done with the strength there, but they've certainly become more bullish, equally more bullish on hogs than where they were back in June. So they raised the 2023 estimate $1.20 for hogs for 2023, and they raised their 2024 estimate $3 to $65 for an annual average. If that all holds true, that would put 2024 hog prices 12% above where they were in 2023. So maybe what's been a tougher time on the hog sector from a producer standpoint in the at least spring part of this year might be looking better as we look ahead. And yes, USDA gave us a little bit of yield adjustment on the grain side, but when you look at prices, that they didn't move the projections for 23-24 corn prices. So still $4.80. And the soybean meal price for 23-24 up $10 to the $375 a ton. So still getting a break on feed cost in 24 relative to where we've been, because that'll put corn prices 27% above a year ago, and soybean meal prices 17% below a year ago.
I think it's interesting taking a look at those feed price projections, specifically thinking about the drought. I would assume that there's going to be some adjustments moving forward in terms of that. And I guess that kind of spurs that conversation about your favorite topic, risk management.
Yeah. So I think this all depends on some rainfall that's still yet to come. It seems like we've gotten some rainfall in some parts of corn and soybean country that maybe's been helpful. In other cases, we've had, terrible wind or hail that's harmed crops as well. Trying to put one's arms around all of the things that have been going on from a weather standpoint, I think it's hard. But we could see continued yield reductions in the months ahead, depending on how things continue to unfold. So I do think paying attention to the opportunities to lock in some feed costs could be helpful, just like the opportunities to lock in some higher livestock prices might also be a good move to reduce that risk.
Scott, as we talk, move on, looking at retail prices also out this week. Man, really some strength specifically on the beef side of things.
Yeah, so USDA told us June choice beef retail price at $8.14 a pound. We started this year at $7.57 in January. That $8.14 is 6.2% above where we were a year ago. It just is I think, beginning of what is going to be higher beef retail prices as we continue to see tighter supplies of beef in the marketplace. If you look at the boneless sirloin steak price for a little bit of comparison here, the June number was $11.16 a pound. We started this year at $10.31 on that choice retail beef price. So we've made a big change in terms of the cost there. Ground beef prices are higher as we've gone through the year, but we started at $4.79 and now we sit at $5.03. So not as much as we're seeing on the steak side, but that certainly, I think, may have the attention of consumers. And although demand seems to be still fairly strong, given the kinds of prices we're putting at consumers, one has to wonder if that point of tip over comes at some point. On the pork side, the pork retail price, $4.68 a pound for June. That's 5% below where we were a year ago. We continue to see bacon prices. So the retail bacon price, $6.22. That's nearly 16% below where we were a year ago. We started this year at $6.81 bacon prices. So we've been going down on that front. And I'll say, given where the pork cutout value's been and where bellies have been, perhaps that's going to change as we look ahead as well. So lots of interesting things to consider given where retail prices are headed.
Not to cross promote another program that I host, but I also have our consumer facing program, Healthy Living. And one of the areas we talked about this week was being able to adapt and make changes in your grocery buying habits, specifically to counter some of these increases. You brought up the ground beef and like thinking about buying things for people who may not be, have access. I can open my freezer and pull some ground beef from our farm, but if you're having to buy in public or buying from the grocery store, look at buying in bulk and looking at ways to store and do that. As we look at kind of tying in that consumer sentiment, obviously things have improved, but have we also kind of maybe thought about how we purchase things differently, knowing, with jobs and wages that we talked about a week ago, kind of that whole big picture that maybe helps us pull through on consumer sentiment and be able to still purchase even though prices are going up?
Yeah, so perhaps I think this all just points to it's tighter for a lot of consumers in terms of the choices they need to make relative to the money in their pockets, and being wiser in terms of some of those meat purchases can help spread those dollars further. It does look like things are brighter right now, which is all good news. But just as I'll say for producers to do risk management, some of this is for consumers to do risk management as well, in terms of taking advantage of some of those buying opportunities that might be out there. I'll say undoubtedly beef prices are going to go higher than where we sit today, and that's an opportunity to perhaps get some product stockpiled, if you will. I will remind us that a lot of consumers consume most of their meat away from home, and that's a different dynamic, I think, than what I'm going to consume at home.
Let's take a look at consumer sentiment. Really, you mentioned it's a bright spot, and it's not just a bright spot in terms of month to month increases. From where we were a year ago, it's a 180.
Yeah, it's nice to see what we got out of the July consumer sentiment report. So certainly the slowdown in inflation has been important to this consumer sentiment measure, as well as what I think is a little less volatility in some of the labor markets that we see today. But the July numbers were up 13%, almost 13% relative to where they were in June, and 41% above where they were a year ago at this time. Now, we'll see how that continues in front of us, and it's both the current conditions as well as the expectations being higher, expectations leading a little more of the increase in the overall index. When you look at the number for July of 72.6, we were about sitting 101 prior to COVID outbreak. So we're about halfway back from the low to where we started pre-COVID. If that puts a little bit of perspective on where this recovery's been.
I would assume lower gas prices help. We've seen a significant reduction in prices. I think CPI data this week showed egg prices have dropped a huge amount since the start of the year. As we look, go ahead. Sorry.
I was going to say, boy, you hit the nail on the head. Now, I will just say we're going to continue to see that volatility, right? But I remember all of the egg stories one could do back in the end of 2022 when they were at record high prices, and that was one where the cure for high prices is high prices. But both supplies recovered as well as I think it slowed demand just a little bit.
I love that phrase, and I love when I make you put on your economics hat. We talk the adage is always the high prices, cure for high prices is high prices. Is that is the cattle sector and the cattle industry kind of an outlier in that conversation because drought continues to be an issue, all of these other factors coming into play that's preventing producers from making investments and being able to expand?
So I think that's the case, and maybe this should be the old adage should be the cure for record profitability is record profitability, of which when we think about cattle, we might be talking about record cattle prices, but we're not talking about record profitability. We're not where we were back in 2014, early 2015, as those hay costs, pasture costs in particular, have just been extremely high as well. So I think that's part of what's at play, and we're continuing to see some parts of this country that are liquidating cows, moving cattle faster to feed yards, et cetera, trying to deal with what's a lack of rainfall. So I think we have those extenuating circumstances that it's going to take a while, and And let alone the next phase that comes at some point of, hey, we need to retain some heifers to grow the herd. We start retaining those heifers, and that makes current beef production even lower. All of that just tells me we're not done going higher unless consumer demand somehow falters abruptly from where we've been.
And part of that herd expansion component is the fact that we're sending so many cows to slaughter too, right? Slaughter cow numbers are up in a lot of places, higher than they've been in years.
That is true. If you look at the data, so total beef cow slaughter year to date is down relative to where we were in 2022, but let's be careful. So we're down 11.2% through May in beef cow slaughter, but 2022 was incredibly high as well because of drought liquidation. So I think we're not done in terms of sending those cows to slaughter, and some places have been accelerating for sure. It just tells me we're not building, and so we're going to get tighter in terms of beef supplies as we look ahead. So again, to me, so we know the supply side now. We know it's going to get tighter. We're likely going to back-to-back downturns in beef production that we've never seen before. If that tells you anything, it's that prices stay high. I think the only uncertainty, frankly, about cattle prices is just where demand goes. And if it stays where it's been, all is good. If it gets really weak, then maybe there's some issues.
It sets us up nicely to preview next week's report. It's kind of a triple whammy when it comes to biggies for the cattle sector and the cattle industry. Livestock slaughter, July cattle inventory, and cattle on feed all out next week. We've talked a little bit about that already. What are you watching though? Specifically, this might be the only time, one of the 2 times in the year where I'm less worried about what livestock slaughter and cattle on feed say. What are you watching specifically in that July cattle inventory report? Yeah,
so this is all about beef cow inventory again. I think, if you look at where we were a year ago, 30.35 million head of beef cows, according to USDA. July 1 of 2022, are we going to be 29 and a half or below? None of that will surprise me. I do think it's going to be a mixed bag. I think some places that had a lot of very dry weather, 21 and 22, have seen a little bit of recovery that maybe might even talk about some modest increases. Other parts, and I'll throw Missouri in this mix where it is dry. We got some pretty serious issues relative to pasture conditions where I won't be surprised, even though we were up 4,000 head January 1 of 23 relative to Jan 1 of 22, that we'll be down July 1 relative to July 1 of 22. So I just think that's the biggest piece of this cattle report that I'm going to be focused on, just to see, number one, whether I'm wrong and we haven't seen as much liquidation as I expect, or even more than I expect.
Well, there'll be plenty for us to talk about next Friday. Scott, it's always great to see you.
Great to see you as well, Megan.
I hope it's raining. I hope it rains on your birthday and the entire weekend.
So I will say Columbia did get rain. So I think the commitment cone that was west of Columbia must have gotten knocked away. So it's nice to see a little rain through Columbia.
Here's hoping it doesn't stop anytime like in the next couple of days. Right?
That's right.
All right. We will see you next Friday. To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments there. And for a rundown of what happens with the market Monday through Friday, check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.